Welcome back, ladies and gentlemen, on this magnificent Thursday for what is going to be another jam-packed daily cryptocurrency market update delivered by yours truly, Allincrypto. As always, if you are new around here and finding yourself on my videos for the first time today, don't forget to check out that subscribe button because we drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And that's exactly what we're going to be doing in this video. Yesterday was a very heavy day for the broader markets as we had the CPI number coming out. And of course, we had the rate decision followed by the press conference that, of course, Jerome Powell presented. And we're going to be looking at that. And there's a trigger warning with this video, guys. You're going to find it very hard to believe that we are not in a matrix after listening to what Jerome Powell predicts in regards to rate projections. It really, in my opinion, doesn't align with the markets or where anybody thought anything was going. So, of course, they didn't lower interest rates yesterday as expected. Are they going to lower interest rates? Well, in my opinion, they are. We're going to look at some of the reasons why in regards to debt and things like this. We are going to be spending quite a bit of time on that and, of course, looking at CPIs, how that affected the market, then Jerome Powell, what he did and how that affected the market. Rounding it all up, you're in two camps macroeconomically. You're in the higher rate camp, which means higher yields, which means higher dollar, which means risk isn't going to do well. Or you're in the rates are coming down, yields are coming down, and the dollar's coming down, and risk's going to do well camp. And that's the camp I'm in. That's the camp people like Stan Druckenmiller are in, moving from NVIDIA down to the IWM, which is the Russell 2000, which is a kind of basket of smaller stocks. I think MicroStrategy is the second largest stock within that index. The first one is a chip stock. And I think it's about $40 billion. So very small, way off a $2.5 trillion stock. He's gone for a smaller one, meaning he's also betting interest rates are coming down. The dollar's going to come down and risk is going to do well, which is the camp we're in. But Jerome Powell, I think yesterday threw a real spanner in the works in regards to what he said. And actually what he said doesn't even make any damn sense. The first place I want to start, though, however, talking about things that don't make any damn sense is with the man, the myth, and the legend, Mr. Joe Biden. Aren't you all over the moon that he is running the most powerful country in the United States? So Joe Biden's campaign is in talks to accept crypto donations through Coinbase Commerce, the Block reports. Now, why am I bringing this up? Well, first of all, it's a good thing that Joe and his campaign are open to the idea of crypto. But second of all, just like what we're going to look at Jerome Powell saying, which doesn't make a lot of sense to me, and I'm not sure what the logic behind all that is, Biden's SEC is suing Coinbase in federal court, arguing it doesn't have a right to exist as an exchange. At the same time, the Biden campaign is preparing to accept crypto donations via Coinbase. Again, you're going to find it hard to believe that we aren't living in a matrix, guys. when sometimes, you know, this job that I have is, I love it. I love this industry. I love this space. I love talking and educating people financially because I really do think it can better not only their lives, but the people around them's lives. But sometimes you've just got to laugh. You've got to throw your hands up and say, hey, you know, sometimes things just don't make sense. And we're going to look at that in regards to the SEC, or not the SEC, sorry, the Fed, and what was said yesterday in regards to projections. But this makes no sense whatsoever. Coinbase is a stock that's done very well from us. We've been buying it from the 30, 40 sort of dollar range. It's now, 200. We think it's going to 400 and something. And we're slowly but surely getting there. And we've used that as a barometer to say, look, well, if Coinbase is going up, crypto's going up. And if, just like we've done with lots of other things. So interesting. What are your thoughts on all of this? Pretty funny if you ask me. Doesn't make that much sense, does it? And ultimately, it gives me a little bit of confidence that Coinbase, like I've always said, will win the lawsuit. And that's going to bring broader clarity for the entire industry. Let's talk now about what happened yesterday. So to go over to Forex Factory, yesterday we had the CPI expectations. Month on month, it came out at 0, meaning there was no inflation month on month. And the CPI year on year came out at 3.3. The expectations were 3.4. Now, this is how Zidala reacted to this news. So you can see this was Friday, which is why certainly crypto had such a poor weekend, was because risk generally did on the back end of a strong dollar. Remember, the correlation there is the dollar up, risk down. What drives the dollar? Well, it's interest rates. Yields drive interest rates. Remember those two camps. You're in the higher interest rates through higher yields, which means the dollar's going to strengthen camp, which means risk isn't going to do well. You're in that camp if you're bearish. To be bullish, you're in the interest rates are going to come down. Yields are, of course, going to lead that, which I think they are, which means bonds are going to go up. We saw that record demand from both the UK and the US in regards to bonds. I think it was on Tuesday. We also saw demand for mortgages, which is kind of maybe an interest rate play there, just like a lower basket stock like IWM that Stan Druckenmiller is betting on is. But on Friday, to sort of focus, and that's the bullish camp, is that you know, yields, rates, dollar coming down, risk going to do well in that environment because we know the correlation there. And we think if interest rates are going to go where I thought they were up until Jerome Powell threw a real spanner in the works and kind of had everyone confused, then, you know, I'm still on the bullish camp. But I think, you know, we've got a Fed that is, I don't really think they have a clue what they're doing at this point, certainly given what was spoken about yesterday. But Friday, this is what you saw. You saw last Friday high non-farm payroll, which gives the Fed the backing to keep rates higher for longer, and prices out interest rate cuts, which the markets don't want. So this strong dollar obviously leaned. Let's actually throw a risk chart on here because we're saying all this. Some people might be new to the channel, perhaps not quite up to date with a lot of what we do here, but you can see as the dollar gained strength, this is what Bitcoin did. Then as the dollar started to roll, this is what Bitcoin did yesterday. So this is an hourly chart. So this rolled on CPI. You even had Richard Tang, Binance's new CEO, saying US inflation data cooling, bullish. And he's on the right line of things. And you can see this is dollar obviously in the Japanese candlesticks. CPI came out, dollar rolled, risk went up, and then Jerome Powell opened his mouth. And basically confused the hell and gave about as much clarity to the entire situation as I don't know what, to be honest. I think it's absolutely insane what he said. And that's what we're going to dive over to now, to sort of look at that. And then we'll look at Bitcoin on the smaller time frames and sort of wrap the video off. But what I want to do now is actually dive over to a clip of JP, the man, the myth, and legend. I mean, this guy, you know... I've actually given him a little bit of credit for saying, look, he's done not a bad job on inflation if you believe their stats. If you believe their stats, that's the key point here. And then he goes and says this, and I'll tell you what bit I'm most shocked in regards, and I'll tell you before we watch it and watch out for it, that it's when he predicts or projects where they think rates are going to go up until the end of 2026. We'll see. I think the Fed's going to do more damage than good if they do that to themselves, to the dollar, to the US system. But let's dive into the clip.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5% and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon, or too much, could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SCP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting based on the totality of the data and its implications for the outlook and the balance of risks.
So basically, to summarize, they haven't got a clue. They don't know. They're just going to leave rates where they are. And the projection, the medium projection that they gave for interest rates into the future were by the end of this year, 5.1%. Why 5.1? In fact, that means that what was, and this is what we've been suffering from this year with a sort of stubborn inflation, which has been bolstering yields, bolstering the dollar, leaning on risk. What was supposed to be a year of multiple cuts, there was 7, I think, priced in going into this year. We now are looking at 3, September the earliest one, and that's kind of still in line, but 5.1%, a lot of people are sort of rethinking this. And then he says, actually, at the end of 2025, so next year at the end of, they're looking at 4.1%. And the end of 2026, 3.1%. Has he just subtracted 1 each year? Is that how the members of the Fed work out federal policy into the future? How can you even predict that far ahead? And he kind of admitted all that at the end. He said, whatever happens, and this is why economic data is so important. As a cryptocurrency investor, you need to watch all of this. And this is why the dollar gained a little bit of strength yesterday, and you saw risk tank on the back end of it, because it introduces uncertainty. Or uncertainty, re-uncertainty. I don't think that's a word. I would argue the Fed needs to lower rates more than anyone. So this is federal debt right now, currently at $34.5 trillion. This is US Gov interest payments. So the US Gov is, and they've already upped the debt ceiling, they're going to have to continue to do that, they're going to have to continue to print money. The ultimate game is they continue to proliferate. And within that, there's going to be peaks and troughs, and you need to understand the broader game. And this is why you need to be in assets. I'm not saying everyone, people will say, oh, how can you say everyone needs to be all in crypto? I'm all in crypto because of the age that I'm at, because of the risk I can take, because of the reward that I'm calculating from the cryptocurrency market. I believe in this industry. I think it's going to change the world, and I'm here for that journey. That's why I'm majority in altcoins. And, I can take that risk at the age I'm at with the sort of financial status that I've already got. So, but assets generally people need to be in. This is why the rich get richer and the poor get poorer. And this, of course, is a record $9.3 trillion worth of debt will mature within a year. The time is ticking for the Fed to start lowering rates. Otherwise, at what point does QT become QE, in the sense that the colossal debt that you already have needs to be serviced? You're putting a higher interest rate on it in the name of sort of killing inflation, which means you're going to have to print more money to actually service that, which is what the Treasury's been doing over the past little while. So I want to sort of know your take on things. It doesn't make a great deal of sense to me, everything that Jerome Powell said in that. He really, I think, confused markets. They don't like confusion. They want certainty. That's what we want. You're in the one of the two camps. You're in the rates are going up, yields are going up, dollars going up, or you're in the camp that I'm in, which is actually they are going to bring rates down. Risk is going to enjoy this. Technically, we think this is signaled. When we look at Bitcoin on our kind of macro view, we think this is very much the case. We also still potentially maybe have that smaller pattern in play. If we drop right down to the daily, you have, there could be some sort of a squaring up or a squeezing, continuation pattern here. This is very flag-esque. You do potentially have your inverse head and shoulders here. We'll see what happens. I think that the markets, he didn't really say a great deal to give anybody any confidence yesterday. Gold off today, some of the futures market for the S&P off. The dollar up, of course, on the back end of it. It's an uncertainty trade. Yield still marginally down, except for, I think, what is this, the 2-year? And obviously, TLT still actually doing quite well. But you can see it got hit on the back end of this because it's uncertainty, and we need that certainty and sort of more concrete projection. So that is it from me, ladies and gentlemen. Economic data, I think, after that meeting is now more important to watch than ever. It always has been important, but certainly with the sort of uncertainty, which is why we saw the dollar sort of after the CPI, it rolled, and then it kind of went, oh, hang on. JP's giving us a bit of a lifeline here, and that's, of course, leaned on risk, and this is the kind of leverages or the levers that get pulled within the market. So that's it from me. I hope you've enjoyed this content as much as I've enjoyed presenting it. On that note, I am going to love and leave you. And I look forward to seeing you all in the next daily market update and, of course, this evening's video. Thanks a lot for watching, everybody. See you in the next one.